Hello, and welcome to part 4 of our series titled Understanding Binary Options. This particular video deals with a very simple strategy, which I like to refer to as the safety numbers or majority vote strategy. Originally, video 4 was supposed to deal with the concept of point of inflection with respect to curves, but in retrospect, I think it's better that we talk about certain strategies before we get into that concept, as I think it'll make the whole series more meaningful when put together. So let's briefly have a recap. What is binary option trading? Essentially, we pick a commodity or currency or stock or index, and each of these has a current value, a value right now before we're ready to make a trade. And binary option trading relies on our ability to predict what the value of this is going to be sometime in the future. We call if we think the value is going to go up, and we put if we think that the value is going to go down. And being right means we get a percentage of the amount we invested, and being wrong means we lose all of what we put in. So as part of this series, we already covered a set of basic strategies, and essentially, aside from the novice strategy, what we're focusing on is we're thinking of each trade as not being independent of the other. For example, in part 2, we discussed the concept that no stock or index can rise or fall indefinitely, and if we just pick any direction, no matter what it is, and we just stick with it, eventually we hope to be correct. And whenever we are correct, hopefully we bet such a large amount that we offset the losses that we may have made when we were wrong on earlier bets. And then in part 3, we discussed a strategy where we invest in related indices in order to maximize profits. And what are related indices? They're indices that share a particular currency. And again, this is described in detail in part 3 of our video series. This strategy, the one we discussed in video 4, is slightly opposite. It's more along the lines of what we talked about in the novice view, because in this case, we're no longer focusing on each trade as independent of the other. Rather, we're focusing on something else. We believe in the concept that other people know what we're doing. So let's get right into it. In this particular strategy, we rely on the majority vote. Often, binary option trading sites such as TradeRush and OptionBit, just to name a few, will provide statistics on how other people are voting at any given point in time. For example, let's say we're trying to bet on the euro to the US dollar, and we're trying to trade at for the next slot, which is at 10:30. It is currently 10:02, and we need to place our bet by 10:05. So the website tells us that currently 70% of the people that are participating in this trade have decided to call, and only 30% of the people have decided to put. So the spread is 70% to 30%. This strategy, being extremely simplistic, decides to throw our lot in with the majority of the people. We follow the safety numbers rule. Majority of people should know what they're doing. And in this case, since 70% of the people have decided to call, we're going to call too, simply because they're in the majority. Now, it's a very simple strategy. There's really not much else to it. But we should realize that it's a fairly blind strategy. We're not applying logic here. And just like with all the other strategies that we've discussed thus far, there are things we need to be very careful about. So what are they? First off, we're no longer relying on our personal logic. Rather, we're relying on the assumption that most people would know what they're doing. If our own common sense or logic tells us to put, but most people are calling, we would also decide to call, going against our personal logic. We need to question the abilities of the other people trading. For example, are they just like us, or are they really experienced traders? If they're really experienced traders, and if they really know what they're doing, it makes sense that we would want to vote the same way as they are. But what if they're just like us, and they're kind of gambling too? In this case, do we really want to put our faith in such people who are kind of taking a 50-50 chance? It's something we really need to think about. At the same time, it's something we need to be aware of, that we rely on these statistics because they're provided by the websites that are facilitating this trading, and we actually have no information as to whether these statistics are accurate or not. I'm not trying to say that the websites may doctor the statistic, but I am trying to imply that sometimes calculations can be done differently. And we have no idea how these calculations are made, so we're completely relying on the ability and judgment of the website to calculate these statistics and to be honest when revealing these statistics. And of course, such a statistic is extremely time sensitive. For example, we just talked about a trade where we wanna get in a trade that's going to finish at 10:30, and it's 10:02 right now. The last minute that we can register for this trade is 10:05, and at 10:02 we see that 70% of the people have decided to call and 30% of the people have decided to put. So we decide, okay, we're going to call as well. But then at 10:04, maybe 70% of the people have decided to put and 30% of the people have decided to call. Things can change very rapidly. And therefore, if we're going to rely on such a statistic, we have to be aware of the fact that it's extremely time sensitive. Also, in our particular example, which was fabricated, by the way, we had a spread of 70% to 30%. It's fairly clear where the majority is. But what if the spread was 53% to 47%? In this case, going strictly by numbers, of course 53% is the majority, but it's not the majority by that much. And we need to be very careful, because in such scenarios we need to make decisions on when the margin of difference is so slim, where do we really want to put our money? So what this strategy boils down to is it comes down to us gambling again, which is very similar to the novice based strategy that we discussed in part 1 of our series. This time we're betting on the majority of the people either having the right logic or having the right instinct. If they make money, we make money. And it's very important to note that for this particular strategy, if there's one takeaway we need to have, it's this, that we're again gambling. So in summary, this video, it was a very short video which dealt with a very simple strategy, and this strategy relies on us putting our faith in other people, in the majority of the people, and if they know what they're doing and we follow them, we're going to end up making money. So that's about it for this video, and I hope it was helpful. In the coming videos, we're going to discuss other simple strategies, and then having discussed those strategies, we're going to delve right into the concepts of points of inflection for curves, and then going further from that, we're going to talk about support and resistance, two very important concepts which are pertinent not just to binary option trading, but any kind of stock trading whatsoever. So again, I hope this was helpful. If it was, or even if it wasn't, please feel free to leave comments. And I hope you have a lot of success when you go online and you try and take part in binary option trading. And I wish you the very best of luck. Thank you.